analytical details, and we'll also take you through how some of these messages should be passed along. Without further ado, I'll pass you on to my Mr. Henry.
Yeah, morning everyone, uh, fellow dear guys. I hope we're making morning. We're going to be looking at how we believe that the market can be rejuvenated based on the fact that there is value, whether stock prices are going up or stock prices are coming down. More importantly, it is also what we do, stakeholders, to be able to extract this value and then make our clients or the investing public to see the kind of value. It's unfortunate that the last 2 years and even year has been the way it is now. What I'm talking about is the market that we used to do about 13 trillion naira is now about 6.54 trillion today. That's more than half. So we believe that we should not, as a matter of fact, pass up what we do and to look at areas. Yes, we'll diversify, we'll look at other areas, but the market made up of equities and debt is the market that we all have, and we have to ensure that we'll carry our clients along. Now, I have chosen the topic that we should all brace up to be the ambassador of the capital market is the fact that we can continue to wait for the regulators. I'm talking about SEC and NSC. And also, we have stakeholders like the CBN, we have the institutional investors, also includes the PFAs. We want all of them, to know that this market is an attractive market, and when the market is going up, there is money to be made. When it's going down, there is money to be made. I would like to nudge you guys forward. Some of even the analysis that has been done. Research gave us information on about 28 companies, and based on the 28 companies, from what they did last year until now, all of them had one route, their earnings before taxes. In fact, minimum I can see here is about 15%. Yes. Some even double-digit growth, triple-digit growth. I also believe, based on what I was told, that they also have good corporate actions in terms of dividends, and then some, did bonus issues. Now, what message have we been communicating to our clients or the investing public? The message should be that where we have over 200 stocks listed on the stock exchange, and then you have companies with peers that you can actually boast of compared to other countries, and especially compared to emerging markets. You have P that you can actually look at to value the companies. You let them know that all we need to do is to get people to begin to have confidence in the market. Now, the thing is, the other people will wait. So we have to begin in-house. And that is why I'm coming with this message today. Now, all of us, from top to the bottom, and from bottom to the top, should begin the process of nodding and getting our clients to begin to have the kind of confidence that they used to have prior to the 2007-2008 meltdown. And the way we're going to do it is we need to give them analysis of what happened in the past. Analysis is always made available by research and strategy. If you guys also look at what we've always published in this day, you see very useful analysis on companies, on sectors, and all of those things. I like all of us to consistently read those publications. I would also like us to get those publications across to our clients, especially on the internet. We forward it to them by way of attachment, and then further also in research, so that if they log on, they can read it. Perhaps there are people who do not have access to this day or do not read this day. But I want to go beyond that. I want us to also, because we're going to be working on certain ways of how we can bring stakeholders together. In my discussion with Funchal yesterday, I told him that this actually is a financial war. When I mean financial war, I'm not asking you guys to go the Boko Haram way. What I'm saying is that it is an intellectual way of engaging people and let them know that whatever anyone is doing out there, this is our own market. This is the market that we know, and this is the market where we were making money from. We are making money and will continue to make money from. Now we've made so many millionaires and billionaires, and these so-called people, some of them have market, but they still have money. In fact, some of them are probably just looking at the money, earning miserable 2 to 3% return investment in the money market instruments. In a situation
is nearly 10%.
You see, so I want us to have a buy-in back market first as BGS staff, BGL ambassadors, and then we bring on board our customers, our clients, and the investing public. We're going to be working with SEC, NSC. We're also going to be taking this message to the CBN, the PFA, Spencom, and all the concerned stakeholders that this market up until 2009. Let's even take a situation where the banks recapitalized. All the banks at that time, except Standard Chartered Bank and City banks, all of them raised capital from the market. And then these banks actually raised more than the market to raise, and they have those capital. So we also have to make sure that institutional investors who were making money from this market will begin to take the message back to them. We will come up with proposals, we'll come up with presentation, working with research, working with strategy, and working with everybody in BJ Securities, BGL Asset Management, BJ Private Equity, Investment Bank, all of us. So whatever presentation that we're making out there, is the message that we're communicating. That companies with groupies, we have companies with good result, performance is very key. A lot of companies are posting good results. So if you're talking about technical and fundamental analysis, a lot of these companies have it. So I will stop here for now, and then we'll entertain some questions and clarifications. I hope I've been audible enough, and then I hope you guys appreciate the fact that nobody knows the market better than we do, and nobody is coming here to resuscitate the market or to rejuvenate the market or to bring back confidence into the market, except we ourselves do it and we take it out to people. Thank you.
Okay, thank you. You can start going to make this as interactive as possible, as flexible and free-flowing as possible. But you can also keep an eye on the presentation and the details of the presentation, which is just to buttress what Henry has been saying about the value that has been uncovered. If there was correction to be made, as he said, the correction was probably completed after the 2008-2009 meltdown. What we have is a situation where, just to go into one or two specifics, you see trading P's as low as 14, 15 times for the market bellwether Dangote cement. Beyond that, among some of the banks, you see single-digit P's, which when you compare that to their underlying earnings growth. It tells you, what you call a PE to growth ratio. Tells just how attractive some of these stocks are. Zenith with a P which is trending around the 8 times, with a GTB, a First Bank. For a Guinness, which has been one of the few outliers which has enjoyed price appreciation, a P of 17, 18 times, considering the kind of optic outlook for the breweries and beverages market that many people have, it's still a P of well below 20, still proceeds tremendous value for long-term investors, including the institutional investors. These stories that we know, these are the facts, rather, to put it better, that we need to reiterate. Many people have an inkling, for instance, about these P's, but they might have known some of these banking P's when they were 10, 11. They will be surprised to know that they are single digit now. They might have known about the P of Dangote Cement, which as of this is the beginning of October, as of just a couple of months ago, was trending around 18 times. It is now below 15 times. So to find them and look, this, as Warren Buffett says, be greedy when other people are afraid, and be afraid when others. This is the time to be a bit greedy. It is the time for our investors to start returning to the market, particular institutional investors. And that is the message that we want to pass on. I know you also had some particular interest in sectors like agriculture and banking. I don't know if you want to tell us what your impressions are about some sector-specific values or potentials that we should be careful about, so that pass on those.
If you look at banking as it is now, excuse me, I believe that the last stage of correction has been completed, and based on the figures that you can see up there, these banks portray a very good avenue for people to begin to reconsider their investment objectives and to begin to actually rejig the portfolio. Even if you look at the first three banks there, Zenith, GD Bank, and First Bank, these are banks that now were trading at highs of 30, 40, and look at what they're trading at today. Now, you also look at their performance, their what's it called, gross earnings. You look at their EBT, fantastic figures. Earnings are fantastic. P ratio of the three banks, single digits. Banks within the next 2 months, I want to believe, can actually make nothing less than 20% return on investment for any client that wants to key in now. A GT bank is a First Bank, annually will declare good dividend, corporate, which justify the fact that this is where to actually invest. Now, I was talking about agriculture, yesterday with Funshaw, and I even said to him that if we as a country realize the kind of potential, the agricultural sector tends for us, is now that we will begin to put in place the framework, the structure, more importantly, the financial commitment to ensure that we bring value from this sector. If you look at Okumu oil palm, Okumu trading at 1938, and with the kind of assets that these people are sitting on, a share of 638, PE of, that's actually the lowest, that you can see on that chart now. It's an enormous advantage for a company like Okumu to even be able to bring to bear that are going to have their footprints all over the country, even places where they're not operating. And we're also talking about other companies too that we can begin to talk to in the rural sector that even come to list on the Nigerian stock exchange, because we cannot continue to be monolithic environment that long where it's only oil. You see, I was part of the federal government technical team to Brazil in 2007. And we went around, it was agriculture and energy. We went to about 5, 6 states, and we saw what they were doing. As we speak to you now, the farmers who actually constituted close to 60% of the workforce, 60%, almost 35% of these 60% have come out of subsistence kind of farming. They are now under what you call small-scale farming institutions that the government has put in place. Government made sure that every value chain, there's something for the people, there's something for the country, but more importantly, that the country is known an agricultural giant. I have my own vision and I have my own structure. I believe that within the next couple of weeks, you will begin to hear from me, whether verbally or in the print, as to how I believe that we can partake in agriculture. Except we're saying that we do not need to feed ourselves to be able to work and to be able to survive. Thank you once again.
Again, go back to the presentation. We are waiting questions. We want to make this interactive, so please use the hand raising tool. It's right here, and Dari will patch you through. Dari, do you want to remind people about how to use the tool? Hello, we actually can't hear you here. I hope the others can hear you. Anyway, I'm going to go back to the presentation since I cannot hear Dari. As you can see, the Nigerian market, as compared to other rival markets or one or two developed markets, portends tremendous fundamental value now. When you look at the price to book, price compared to their balance sheet, and their price to the underlying earnings. Concerning price to book, there we see Nigeria market trading almost at a 1-for-1 ratio when it comes to price to book compared to the more developed UK and US markets, or indeed even to a close geographical and economic rival like South Africa. China, the leading emerging markets, we see at a tremendously high price to books. These are figures for China that come about because, of course, there is a lot of buying pressure. Now, consider Nigeria's fundamentals, the underlying economic drivers. We have low hard currency debt compared to our GDP. We have strong GDP growth, something that very few countries have now. Nigeria's GDP growth, fair agriculture and sectors like trading and telecoms is well 7%. So you have a country with strong economic growth and low international debt. It should be a perfect haven for international portfolio managers to park some funds. However, the international portfolio managers are not going to make that move when they see local institutional investors being overly risk averse. These are the points that have to be pointed out. An international investor will wonder why these values are being uncovered. If he sees a turnaround and realizes that, okay, sophisticated investors are taking advantage, then the international investor will also take advantage. Look at India and the likes. Look at the PE, which is a more sort of well-known multiple, at an average now below 10% for the main companies, blue chips. It's about 9.62 compared to the other market. Again, that story is reiterated. just to look at particular sectors and compare again across other jurisdictions, we see what the international countries are doing with their banking sector, their insurance sector, their beverages, their food, and their construction material. These are the indices that we have to put out there in front of clients, available via research, and just keep telling the story. There will be a turnaround, we know, but we want to be right at the forefront when that turnaround is made, so that we have a sort of, for we use a term loosely and say we have a first mover advantage when it comes to without the inevitable turnaround that will occur.
Well, we should regard ourselves as a catalyst, to make that happen. Okay.
I await your questions. I hope we have everything working here when it comes to audio, because Henry has many present engagements. We thank you for joining us on this forum with questions.
Okay, fine. 5 questions.
Okay, we can take maybe up to 5 questions. I know they hear. Hello, I know they can hear us, but I don't think we can hear people here.
Hello everyone, this is Antoinette. Remember, this is supposed to be an interactive session. If you have a question, you can either raise your hand or ask for the mic to be passed to you. If, however, you don't want any of these options, you can send a message to Laraiyetan, right, and he will forward that message or that question to the presenters. So we are looking forward to hearing from all of you. Thank you.
Okay, well, with the questions, let's just go again over the way the outlook for the market is, the overview for the market. Overall volatility is still quite high. We know that we start sort of with the bad news. That is the way to pass the message on. We're not hiding from the fact that the market has lost up to 17, nearly 18% year to date. If you compare to the high, which was mid-January, I believe, you can see the chart there that there's been a tremendous downturn. But so you start with the bad. The point is, given this
Not start with the bad.
Okay.
You let them understand that this is what happened so far, but
Exactly.
that is not
the
the
way
direction of how things will continue to be.
Well, that's the best way of putting it. So we'll start that way and then move on to those tremendous values that we see, especially for investors that are not just speculating, for investors that need, not just want, but need to have a mid to long-term horizon. As Henry said, you're not going to leave your money at 2-3% earning in 2 or 3% earning assets in a country that has 10%, low 10% inflation rate. On the average, it's probably closer to 12 to 13%. This is the time for investors to take their monies, retail investors, but particularly led by sophisticated HNIs and institutional investors, to take their money and start taking value positions in large blue chips that are undervalued. And we've gone through the underlying earnings, which shows tremendous growth right across sectors, from a conglomerate like UAC to a brewery giant like Guinness, to a staple, a defensive food company like Nestle, to a petroleum marketing giant like Mobil, and we can go on to Honeywell, our friends in Honeywell, to the market leader. This is about 20%, 22% of the market, Dangote Cement. Despite all the issues with cement pricing and all of that, in the interim, in the full period, indeed, you see double-digit growth nearing 60%. These are the facts that need to be stated and restated. It's just a matter of momentum, it's a matter of time, but it has to be stated properly. Sorry about that. From looking at their performance, their P&L performance, you now then take the story on to what, in terms of pricing and overall valuation, it's what their underlying PT, their earnings, has done to pricing overarch or overhang in terms of the PEs, and that is the way it should be told, or indeed in terms of the price to book.
Then, additionally, one other thing that we're going to be working on with NSC is to ensure that these companies, begin to go back to the tradition of providing facts behind the figures, which will go beyond historic performances, to what they're currently doing and what they're going to be doing, so that analysts will even have first-hand information and up-to-date status of these companies. We also concluded arrangement to ensure that if it is possible, company visitation, will be encouraged, so that as many people as possible who want to actually go and have a one-on-one talk with management of these companies, see what they're doing and all of those things, and then begin the process of ensuring that even some of these guys on their own, on the forum or the fora that I said we'll be creating, also come around to talk, to make presentation. I'm talking about presentation that are backed with facts, to ensure that they actually wake up market, wake up the people, because as far as concerned, they can also sit down and say happy with what is happening. Because at one point in time, they might also need to recapitalize the company, and are they going to be saying they're going with the kind of prices that when their company earnings, by the time you look at it, that they're actually undervalued. So I said that we're going to get all these stakeholders to begin the process of actually reaching out to the investing public. Those are some of the ways that we're going to achieve that.
To remind ourselves that, of course, Nigeria sits within the global economy. We see that the downturn that has been mirrored, that has occurred in the Nigerian capital market, is by as mirrored in other markets. Let's not forget that. We know about the turmoil going on in the U.S. with all their issues with their debt overhang, the largest and most powerful economy in the world. We know about Greece and the pressure it has put on the Eurozone. Even Britain is under its domestic austerity pressures. But like we said earlier, what makes Nigeria comparable to a China, India, or Brazil, which have defied some of the global pressures, is that we also have a growing economy, attractive growing economy, and low debt, international debt burden. We have issues with local debt, but it's Naira-based. Naira-based debt can easily be engineered. We look at the Nasdaq, for instance, and we see that we see the amount of volatility and turmoil, and the overall trend towards much more modest pricing, as mirrored in the FTSE as well, the UK bourse, and indeed in for the GSE, the South African bourse, we see that the volatility is much more amplified, much more pronounced than has been in other more developed markets, and it is possible to make a comparison with our own market. So we're being punished more or less for, apart from whatever issues there are domestically, we're being punished for the overall international situation, but we're being punished more than deserved. And that's the point, that because he was particular about making this contrast and comparison known, so that we can tell if a holistic story and put the facts out there as he has stated.
And especially when the foreign institutional investors that have been in this market, or that we're also going to be talking to, or we're going to be asking to come back, asking us questions, we should be able to present facts and figures. And like I said, if any of you have a request for information, just try and contact Funsho or any of his colleagues in research and strategy. Thank you.
Okay. Okay. I'm being told now that there are questions that are coming up on the chat. I don't know if we have a problem. We're not seeing the questions, so trying to figure out this to give us a second. This is the beginning of the chat. Okay, I can see one or two questions here. Okay. Henry has just 5 to 10 minutes more, so we'll quickly try to go through these questions. Okay.
Okay. While you sort out the technical problems on your side, let me just read out one of the questions that we received. Okay. Despite the bargain hunting opportunities we see in this market, we must understand that investor pessimism will remain. What efforts is BGL doing to engage with regulators to douse the rhetorics that have increased investor apprehension in the recent months?
Okay, yeah, I actually, if you guys remember what I said, I think like 3 minutes into my talk, I said that BGL is actually going to be part of the people to orchestrate what I regard as a Commonwealth approach, to making sure that all fears are addressed and that all market participants are brought back. And that is attacking it from a point of stakeholders. We're going to be engaging NSC and SEC on one hand, and then the three of us together, that SEC, NSC, and BGL with other operators, bring associations like Association of Stockbrokers of Nigeria, Association of Issuing Houses, to be able to take the message to CBN also, that we have to have a voice. And when I mentioned CBN, I mentioned CBN in particular, that we have to be able to let CBN know that as a banker to the government, and then as a banker of last resort, as a banker controlling on monetary issues and regulating all other banks in this country, they have a role to play. Because like I said, still 1/3 of the 25 banks that we had before these mergers and co, 23 of them raised money from this market. And if they did not successfully raise substantial funds, I can bet you half of those banks will be nowhere to be found now. So we need to also take the message back to those banks. We need to take the message to PENCOM and PFAs. We need to take the message to institutional investors. We're going to be having some fora where we engage all these stakeholders, where people will have to talk. But it's going to go beyond talking. We're going to be talking based on facts and figures. We're going to also be talking to CBN and even Federal Ministry of Finance on how to put in place some kind of accommodation where the stockbroking community will have access, because funding is also key. And we are going to be working on how this kind of funding can be put in place. So we're actually going to come up with a timetable. I'm going to work particularly with research and strategy and my other colleagues in executive management to jumpstart this process beginning from this month, because I'm tired of talking. I'm actually tired of people complaining to me when we're not doing anything. And then all of us cannot just sit back and say we're not going to do anything. No one is going to say, oh, this is what you said, when they are even seeing us wake up every other person who is sleeping or who probably has given up. So it's an all-stakeholder affair, and I can assure you we're going to drive that process. By the time we're getting back to you people in another maybe 1 month, 2 months, or before the end of this year, I want to assure that you'll begin to see some positive reaction to prices in the market. Thank you.
Okay. The other question I can see here, and we do apologize about the technical glitches, is that we're being told that it's been suggested that people are worried about the risk environment and a perception of stability. Before Henry, I'm sure you have to engage this expansively, but let's remember that Nigeria has just gone through a landmark general elections, by and large, successfully and peacefully. Issues are being, and there are major issues. We're not here to lie to ourselves. There are major issues, but those issues have been passed to the courts. There were 1 or 2 unfortunate tragic incidences, but look, where we've come from in the past, the level of violence and bloodletting was relatively modest. It's sad, but that is the truth. Compared to a country like Kenya and their last general election, the level of bloodletting was relatively modest. When it comes to the terrorism threat, which is what seems to be overhang, compared to other countries, compared again to Kenya and the threat they see over the border from Somalia, compared to the major countries that have terrorists sadly visiting them regularly, despite the events in different parts of Nigeria, the situation is far safer. You remember, we're 150 something million people. The body count is sad, but it is not a game changer in any way. At the end of the day, our economy is growing because people are able to go to work and add value, and our capital market reflects that value. So the risk environment really is dismissible if you look at it in cold analytical form. Compared to countries like Colombia, compared to in India, which is growing tremendously. In China, it's used with Islamic militants in some remote areas. So let us put things in proper perspective. Oga,
well, for sure. I'll just give one example. If you recall, a couple of months ago, go to FTSE. Months ago, the UK witnessed what it never witnessed before when there was this massive riot over the killing of just one person. And this went on for days, also about 3 weeks. By government estimates, lost over £5 billion, because of this. And that was just a district, in that country. So if it could happen in an advanced economy, everything works, where the market is stable, where political, where we saw that the market was affected somewhat, but the market picked up again, and people left the UK to come in Nigeria or to go back to anywhere else that they believe they could run to. I think that we are taking, sometimes people take these things out of context. I will tell you, there is more political stability in Nigeria today than 4 years ago. Election that was held in April, and that was done in May, was a landmark achievement for this country. Like you said, pockets of here and there. It has not been any compared to what we used to witness the Niger Delta a few years ago. I'm telling you, and I can assure you that government will live up to its responsibility to bring halt this particular phenomenon. I understand now that the people have actually, I'm talking about the northern guys who are causing some of these problems, that they are willing to dialogue now, and I believe that government will do a lot to try and ensure that there is security of lives and properties, and that the economy should also be an avenue where people will know that even the BRICS, as we speak about them today, they have unsettling environment. I can tell you, this year you saw what happened in Russia with the bombings and all of those things, but the economy also is growing. So Nigeria, as I speak to you, we should begin to carry that message. If we don't carry the message in a positive light, both internally and externally, nobody's going to do it for us. So let us begin to do what we have to do, to ensure that the market grows.
Okay, all right. Henry has another engagement. So what will happen is that we will use this forum to engage ourselves and engage him. We'll make a reference to this forum for other comments. I can see a comment here about a structure that we need to put in place from somebody on the international desk, and the way we move volumes in the market and speed and efficiency. I can also see a comment about clients and the commissions that we're paying this client. Henry has seen these. Unfortunately, he has another meeting. This forum is supposed to take 1 hour space. It's almost 11 o'clock. So rather hastily, I will close this forum. I thank you all for participating. It's been a tremendous participation level. And these last comments will be taken up. Henry has taken notes of them. We will remind him about them and continue from where we're stopping here.
Thank you all for participating, and wish us the best. Let us remember the BGS spirit is a can-do spirit, okay? We can make things happen. Let us embrace the change. Let's go for the change. It will be better than yesterday. Thank you all. Have a good weekend. Bye.
Thank you.
Okay. Hello, everyone. This session is officially over. Please end the meeting, and at the end of the meeting, there's a questionnaire that we would love for you to fill so that we can improve our performance in subsequent meetings that we have with all of you. Thank you very much, and have a wonderful day.